Accounts payable is one of the biggest areas of finance and accounting. And if you truly understand how to manage this function efficiently and without errors, you'll have this beautiful, well-oiled machine in your business with tons of career growth. Trust me, I've seen that firsthand after managing accounts payable as a fractional CFO for dozens of fast-growing companies. So today, I'm walking you through literally everything I know about the subject. I'll explain what exactly accounts payable is and why it's such an important topic in finance and accounting, how to manage your accounts payable function correctly, and we'll do a full walkthrough using both QuickBooks Online and Ramp for this. Oh, and I'll also show you how you can add a ton of value both to your career and any business by following these exact steps. So let's kick it off with, what exactly is accounts payable? Accounts payable is the money that you as a company owe to your suppliers or vendors. And this is for goods or services that you purchased on credit. So if someone loans you money, that wouldn't really be considered accounts payable. It has to be from a vendor for something that you actually purchased on credit. So last month, I hired a bookkeeper, and that bookkeeper at the end of the month sent me over this thing right here, which showed me how much he worked, what I owe him, and a bunch of other useful information that we'll cover in a sec. But first, we call this a bill. So anytime a vendor performs work and sends me a bill, my accounts payable balance goes up. And anytime I pay off my balance on these bills, my accounts payable balance will then go down. So we just mentioned a buzzword with accounts payable, a bill. Again, a bill is a document you'll receive from a vendor summarizing the details on what you owe and the work involved. But once you pay a vendor, you may then get what's called a receipt or a wire confirmation, which shows evidence that you made a payment. You may also hear the term invoice, which is actually the opposite of a bill. An invoice is something that you send to a customer. This time, you earn the income, and you're sending over a document summarizing what you're owed. So for one company, this document can represent an invoice, while for another, it would represent a bill. It's all dependent on your context. That's why you may hear this term interchangeably. And then you may also hear the term purchase order. This is something that your company will issue to a vendor ahead of time to show an authorization to do business together. Now, this can be backed up with a sales agreement signed by a different department head in your business. And as we'll talk about soon, these two documents will be crucial to ensure that the accounting function can process payments for only the approved bills. But before we talk about how to manage your accounts payable effectively, let's talk about why accounts payable is so important. Well, think about it. Accounts payable directly ties into your cash flow management. The higher your accounts payable balance, the more your cash will eventually go down after you pay off your balance. This is kind of like debt in that it can increase your risk of insolvency if not managed properly. So is a high accounts payable balance a bad thing? Well, not necessarily. See, my business needs what's known as working capital. That's pretty much money that you can quickly access to fund your operations. So paying employees or paying your credit card balance or purchasing software. These are all things you need working capital to support. And the longer you take to pay off your accounts payable balance, the higher your working capital will be. So this can be a good thing, but it can also be a bad signal. See, you need good relationships with people, whether that be your investors or your customers or even your vendors. If you're not paying your vendors on time, they'll get ticked off, bother you.
Where's the money, Lebowski? Oh.
They may even turn off their service entirely, or worse, they could take you to court. You don't want that. You want happy vendors, smooth operations, and good cash flows. So how do you balance keeping your working capital high while also keeping your vendors happy? Well, I'll walk you through some best practices for how to manage, starting with some tips on how to manage this function correctly in your business. But first, let's talk a little bit about accounts payable and how it affects your accounting. Now, which section do you think accounts payable shows up in your financial statements? Well, think about it. This is something you owe to a creditor of the business, and amounts owed to the creditors of the business show up under liabilities. So accounts payable will show up on the liability section of a business's balance sheet. Now, technically, accounts payable is referenced as a current liability, which means it's a liability that you expect to satisfy or fulfill within a 12-month period. And it's calculated by taking your opening balance, adding any bills that you receive from vendors, and subtracting out any payments that you then make to those vendors. And what are some common reports reports related to accounts payable? Well, probably the most common is an accounts payable summary aging report. This showcases all the amounts that you owe to vendors, and it's grouped by those which are current or not yet due, those which are oftentimes 0 to 30 days overdue, 31 to 60 days, 61 to 90, and 90 and over. And if I click into any of these summaries, I can then be taken to my next report. An accounts payable detailed aging report showcases each and every single bill that you receive from a vendor and the details behind what you owe them. Now, when it comes to journal entries, well, those are easy too. Because your accounts payable is a liability, it goes up with a credit and down with a debit. So when you receive a bill, you'll debit the expense and you'll credit accounts payable. When you then pay that bill, well, you'll debit your accounts payable to reduce your balance, and then you'll credit your cash to showcase the payment. Now, I will say, if you're using an accounting software, you won't really need to ever book this journal entry. That's because of one of the many beauties of using an accounting software. It's all automated. Instead, you just need to upload the bill and record the payment. Now, I'll show you how to do that in a little bit, but first, let's talk about some common ratios that you can find with accounts payable. First, we have days payable outstanding. This represents the average number of days it takes for a company to pay its suppliers. So to calculate, you'll simply take your accounts payable balance divided by the purchases on credit times the number of days, or times 360 to get a yearly amount. Another way you could look at this is by taking your average accounts payable and dividing it by your cost of goods sold times the number of days in the period. Now, people typically use cost of goods sold because this is extra relevant when it comes to manufacturing companies, where cost of goods sold represents a large portion of their accounts payable. For other companies, it may not make sense to just use your cost of goods sold. Instead, you'll use the net purchases made on credit. Okay, now let's talk about how you can do accounts payable right for your business. So here's the general flow of events that happens in an accounts payable function. The company enters into an agreement with a vendor to do business. Now, this should be supported by either a sales agreement or a purchase order, or ideally both. Then, the vendor will send over a bill, either before or after they do the work. The due date is all dependent on what's stated in your agreement. After that, the vendor gets paid. Now, this is just a simplified version of a full accounts payable process, but there are tons of factors to take into account to ensure that you're remaining efficient and that you're only processing bill payments for approved vendors. Let's talk about that first piece, how to stay efficient. An accounts payable function will typically consist of a mix of junior staff and senior staff. The junior staff can consist of people with an official title like accounts payable clerk, or it can even be more general, like staff accountant. The senior person in accounts payable function can maybe be called an accounts payable manager, or a senior accountant, or a controller, or even a CFO. It doesn't really matter so much. What matters is that the same person who enters a bill is not the same person who approves and then pays that bill. That would create an audit risk for fraud by giving too much power to just one person. Now, of course, if you're a one-man shop, it's fair for you to be doing it all on your own. But if you have other people in the company, the first step in organizing your accounts payable function correctly will involve you connecting all of the relevant staff members together to ensure strong communications. And one of the best ways I've found to do that is to create a group email address. See, one of the most common reasons why an accounts payable function has friction is because a bill was forwarded to the wrong person. So one person gets the email, but forgets to forward it to another. Or maybe they're on vacation. That creates a logistical nightmare. With a group email address, you can in essence create what's known as a distribution list, where multiple people will be subscribed to all emails that are sent to that email. So for my company, YourCFOguy, I created a group called AP at YourCFOguy. I then added all of the relevant people in my organization that are responsible for managing accounts payable. What I love about this is it's entirely free. I don't have to pay for an extra email license, and I can keep all of the relevant people in my company in the loop. Let me show you how to create one in Gmail really quickly. So to start, I'll navigate to groups.google.com. Okay, here I can now see all the groups that I've already created. Let's create one specifically for our new accounts payable channel. So I'll click create group and I'll call this accounts payable. Now for the actual group email, I'll just make that ap@YourCFOguy.com and I'll hit next. Now anyone in my organization could actually join the group, but I want to make sure that anyone on the web can actually post to this channel. This allows people outside of your organization to be able to send you in bills. If you don't see this, you may want to check with your Google settings. Typically under your admin, you could enable this feature. All right, I'll go click and hit next. And then over here, I can add the relevant people to the group, and I'll just go ahead and click create group. So now if I want to send a bill to this email address, you'll see that in this group inbox, I now have a new email that all the members of my team are able to view. Okay, now you have a group that all vendors know to forward their bills to accordingly. Soon, you'll start to see some activity in this inbox, and you may receive your very first bill. Before we do anything with this bill, we need to ensure that this is a real, valid vendor with a real and valid amount that is owed. See, accounts payable is a really sensitive function because if you process a fraudulent payment accidentally, it can wreak havoc, making it close to impossible under some circumstances to recover your funds. I've seen this happen before. It's one of the nastiest things that can happen in finance and accounting. So step one is to validate who this vendor is and back up the bill with either a sales agreement or a purchase order. And if you don't have either of those, ask around internally or even ask the vendor directly. You shouldn't be doing anything with a bill from someone that you don't recognize or have express approval to do business with. And be careful of vendors emailing you from new emails. Those will most likely be phishing attempts. Now, almost every company will have this, and the more vigilant you could be, the better you can defend yourself from scams. And while you're collecting this information from a vendor, also collect what's known as a W-9. A W-9 is a US document that showcases the vendor's tax status, and under certain rules, you may need to file separate forms with the government at year end. And you don't want to wait until that tax due date to file those forms. Typically, the last day in January of each year is when it's owed. So you'll want to collect this W-9 ahead of time so that you don't have any delays in processing. Okay, so now that you have a bill from a vendor, a reference to some sort of authorizations to do business with this vendor, and their tax details, it's time to get this bill into your accounting software. Now, I'll start off by showing you how to upload a bill using one of the most popular accounting softwares, QuickBooks Online. So here I'm in QuickBooks Online. Now, in reality, this is a bill that I sent over to this customer over here, Acme Corp. Let's assume the roles were reversed. Let's say Acme Corp actually sent me this bill. Well, in order to get that into the accounting software, I'll go ahead and hit New, and then I'll click on Bill. Now, what I in essence need to do is get all of this information into here. So first, I'll enter in the vendor name. Then I'll enter in the bill date. This represents the actual accounting period for what this invoice relates to. The due date. Now this part means that if I pay within 7 days, I'll get a 3% discount. Otherwise, it's due net 30. All right, now I'm gonna also enter in the bill number. This allows me to organize each and every single bill that I receive from this vendor via a unique identifier. And let's get this person's mailing address. And now let's go ahead and enter in the details of this bill. Great, now that I have my bill, the last thing I need to do is upload the actual PDF from my device. This is good for leaving an audit trail to ensure that the right information is attached to this transaction. I'm gonna go ahead and click Save and Close. Now I can see this bill under Acme Corp in my vendors section. I could also run either an AP Aging Summary or an AP Aging Detail Report, which will showcase the total amount that I owe to Acme Corp or the details of each and every single bill that I entered on behalf of Acme Corp. But nowadays, it's actually common to use a special accounts payable software that's separate from your accounting software and sync the information from your AP software to your accounting software. This can save you so much time and greatly reduce the risk of an error or fraud. So I'm gonna show you how to do that in my favorite accounts payable software, which I'm also excited to announce is the sponsor of today's video, Ramp. There's so much you can do in Ramp. And I'm gonna show you how using their platform, you can manage your accounts payable function with a breeze. And whether you're using a software like Ramp or not, these tips are gonna help you run your business so much more efficiently. So to start, Ramp offers you a special email address that you can forward bills to. Now, when you forward a bill to this email address, it will land in Ramp's inbox on their website and upload with any of the attachments from the email. Now that I have my bill, I can use their powerful AI features that will extrapolate the details of this bill. So if it's a vendor I did business with, it'll pick that up and auto-classify things with their OCR technology. And you'll be able to pull in all sorts of details like their invoice date, the description, the due date, and much more. Think about how we just did this in QuickBooks Online. I had to download the bill, upload it in QuickBooks, enter in the details myself, and then attach the bill to the bill in QuickBooks Online. In Ramp, I just forwarded this email and confirmed the details of this bill that was auto-generated. Now, this may not seem like a lot of time that was saved, but when you take this and multiply it by 50, 100, sometimes even hundreds of bills a month, that can save you hours and hours of time. But efficiency isn't the only reason why you should be using an AP platform like Ramp. See, we just spoke about how important it is to have the proper authorization to pay a vendor by reviewing sales agreements and purchase orders before you touch a bill. Well, your job doesn't stop there when it comes to approval. Now you need to get approval that this bill is valid and actually approved for payment. You may have a vendor where you have an agreement to do business, but he may be charging you the complete wrong amount. That's why you need to assign bills for approval. Approvers can be department heads, the CFO, the CEO. You should ideally have a schedule for who's responsible for approving bills from each vendor. And it's okay to have multiple approvers for a bill. In fact, that's pretty common. Okay, so now that you have the bill, you've assigned it for review, and it's been approved, you can now invite your vendors to fill out their ACH or wiring details. Now, this is a great idea because it'll prevent you or someone on your staff from potentially entering in the wrong information. If you process a payment to the wrong person, it will be a nightmare to deal with, and there's a good chance you won't ever get back your money. That's because, as we'll soon see, wire payments are close to impossible for a bank to recover whenever they get processed. So when you invite a vendor to enter in their own details, you greatly reduce the chances of a mistake. Just make sure that the invite's email matches to the purchase order or the agreement that you have between the vendor. Once again, beware of those phishing scams. Okay, so you have the bill uploaded, classified and approved, and you have the vendor's detail. Now it's time to process the payment. Set a schedule for when you'll process payments. It's common to run AP once a week or maybe even once a month, depending on how large your organization is. And now once you run it, be prepared to continue the discussion with the vendors on the status of the payment. Vendors will oftentimes ask for a wiring confirmation or some sort of proof that you made the payment. When using a platform like Ramp, they can just check on their own, saving you some time. Okay, now that we know how to use an accounts payable platform like Ramp, let's cover some alternate ways you may process payments with the vendor. First, you may avoid purchasing something on credit entirely by just paying in cash. But we live in a digital age, and it's actually pretty rare to pay someone in cash these days. And if you had to pay like $10,000, what would you do? Would you just like show up with a briefcase worth of cash? Yeah, I would not feel comfortable bringing that on the New York City subway. So another way is to issue a check. Now the way this works is that you get this little piece of paper, you write down who you want to process a check to, the date, the amount, and then you sign it, and then you mail it to someone. I hate checks. From all perspectives. I hate sending money via checks. I hate collecting money via checks. I hate dealing with the accounting treatment of checks. Think about it. It literally makes everything more complicated. To write a check, you need to get a check, write it out, put it in an envelope, write the vendor's address, include a stamp, put your return address, go to a mailbox, and place it in the mailbox. That means I literally need to leave my office, which my boss would never allow. And then how about after that? This vendor may be like, hey, where's my money? And I'm like, I put it in the mail. You didn't get it? Then I need to check if something went wrong with the mail. Oh, it's a holiday, so mail doesn't work on holidays. Well, wait, is there mail actually on Saturdays? I think there is, but there isn't on Sundays. It may even just get lost in the mail. Now I need to write another one. And by the time that the check actually gets cashed, I may have totally forgotten about this check to begin with. And I'll be like, what's this $10,000 charge on my account? Oh, and if you think it's easier for the guy who gets paid via check, then you don't know how to cash a check. Yeah, see, if you're lucky, your bank will allow you to do it via an app on your phone. But if you're unlucky, or if you have a really big amount, well, then you have to get in your car, drive to the bank, find parking outside. Oh, and of course, you have no quarters. Then you have to walk into the bank during business hours, I will say, wait in line, make small talk with the teller, give her your check, give her your bank account number, which you totally forgot and had to look up. Then the check finally gets deposited in your bank account. Oh, and while you did that, you got a receipt with your bank balance, and there are no trash cans in the bank. So now you have a crumpled up piece of paper in your pocket, and you'll probably forget about it when you later do your laundry, causing your clothing to totally come out all messed up. And that is just because someone chose to write you a check. So please stand with me and sign the petition to get rid of all checks once and for all. Because today, there are so many better ways to process a payment, starting with the easiest, a credit card. Anytime I see an option to pay via credit card, I choose to do that for so many reasons. First, it's so simple. Just get out your credit card, enter in your details electronically, and you can literally be in the middle of a forest. As long as you have service, you can pay someone. But even more so, credit cards give you so much protection. If this guy turns out to be a fraud, I can most likely call up my credit card company and reverse the charge. And credit card companies give a ton of points when you use their money. That's like a loyalty program just for spending money. You also won't have to pay your credit card bill until your next payment cycle, which oftentimes will be at least 30 days into the future. But when your vendor collects payments via credit card, they're gonna have to pay a fee, typically around 3%. This is the payment they make to the credit card company in exchange for it being so easy to do business with someone. Now, that may be worth it, especially if the alternative means you get paid via a check. But if you're charging someone $10,000 or so, you may not want to pay close to $300 in fees. You may instead ask them to process a wire. A wire is an immediate money transfer from your bank to someone else. Now, wire payments are the quickest way to pay someone electronically, and that's why oftentimes it'll be the most preferred method. But a wire comes with its limitations. First, your bank will most likely charge you for processing wires with different rates for sending and receiving a wire. You may also get a different charge if it's a domestic wire or an international wire. If I had to guess why banks charge for bank wires, it's probably because of the level of customer support they need to have on hand if a wire gets processed incorrectly, which to me is the biggest limitation of processing a bank wire. Like we spoke about before, a bank wire is an immediate transfer of cash from one bank to another. So once that transfer takes place, that's it. Sayonara, poof, the money is gone. You ain't never getting it back. It is over. And no matter how many times you call a bank and beg them to send back your money because you didn't realize the guy on the other end was a scammer, it's no use. Believe me, I've seen it. So now let's go over how to actually send a wire in a bank. I use Chase, so I'll use that as an example. Okay, so here I'm in Chase. I'm gonna start by first adding a new recipient. So now you can see I'm being asked for two fields, the account number and the routing number. The account number corresponds for the specific account on that person's bank account. The routing number ties to the actual banking institution in which they have an account. So I'm gonna refer back to this invoice over here from this sassy SaaS vendor, and I'm gonna write in the account number and routing number. And it looks like Chase recognizes that this matches to their routing number, meaning that this vendor banks at Chase as well. Let me now enter in their account number. And now I'll hit the next button. Okay, now I need to fill in the rest of the details on this recipient. So I'll enter in the recipient's name, then I'll enter in their address. Now look at this over here. Look at this message. Chase is telling me right now, look, you're not going to get back your money if you entered in this information incorrectly. This really just goes to show how difficult it is when you process a wire if the information is not entered in correctly. Now I'll click next and I'll confirm that everything looks good. And now I can go ahead and schedule a wire directly to this vendor. Now, aside from processing a wire, you may also process what's known as an ACH if you're in the United States. An ACH stands for Automated Clearinghouse, which is pretty much an electronic financial network allowing you to transfer money. It doesn't arrive instantly like a wire, but typically banks charge less in order to process an ACH. All right, now let's wrap up with some tips on how you can build a career with accounts payable. Tip number 1, be organized. Think about it. In order to be a proper accounts payable clerk, you need to collect information from vendors, communicate that information back to approvals, keep track of when exactly something is due, analyze if there are any discrepancies between a purchase order or sales agreement and the amount specifically in that bill. Being organized is a good idea not only for accounts payable, but for any job in finance and accounting. Next, be extremely meticulous. Like we spoke about earlier, even the slightest mistake in a payment that you process can wreak havoc across a company. Double check all the details of each and every single bill and each and every single payment and each and every single agreement. You don't want to risk even the slightest mistake. And how about this one? Be a great communicator. Think of all the people you need to communicate with in an accounts payable function. You need to communicate with your boss. You need to communicate with approvers, with the vendors, potentially with the bank or your AP platform. All of these people need to be kept in the loop with what exactly they need to do, with where exactly the bill is in the status when it comes to payment. The better you can communicate with these people in real time, the more smoother the accounts payable function will be. And then my last piece of advice, don't just take this as a job in accounts payable. Remember, accounts payable is part of a huge umbrella of finance and accounting. Understand how exactly are these bills being classified in an accounting software? What adjustments need to be made, let's say, if it's a prepaid expense, a bill in which you haven't actually consumed all of the benefit from yet. Take this as an opportunity to eventually leverage other areas of accounting, eventually potentially growing into a controller or a CFO. I've processed what feels like thousands of bills in my career, and you know what? Each and every single one made me a stronger finance and accounting professional. But accounts payable is really just one part of a huge umbrella of the world of finance and accounting. Financial statements are also a really key aspect of finance and accounting. And this video right here is gonna walk you through these financial statements and how they're all connected. Go ahead and check that out. And while you're at it, let me know in the comments, what was your favorite part of today's session on accounts payable? The more that I hear from you, the more I can make additional videos like these. And I hope to catch you next time. Thanks for tuning in.